And you can see that entirety of the down gap was not filled. And this is the problem. This is what's been happening right now. Ladies and gentlemen, K-Kim here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is up about 2.6%. There. On the S&P Nasdaq 2.3%, semiconductor 3.6%, Dow 2.6%, along the transport, actually the Russell 2000 and transport banks, energy, biotech, healthcare, home builders, utilities, retail, emerging market, every single sectors are green today. Notably though, it looks like energy led the market today. Bitcoin up, gold, silver, miners are up quite a bit today. Dollar down, oil up, treasury bond up. VIX is down a little bit. Let's do this. ETF. Spider! 65-minute chart here. So this is what we close on Friday. And that looks like we actually saw a gap up this morning. Keep in mind, on Friday, we did make new lows for the year. As you can see, broken below that low from Thursday. And then looks like Friday, we did make another lower low. They are making year-to-date fresh new low. But with that, on Monday, though, this morning, we did see that gap up, which buyers are desperately looking for in the last entire month or so. So once we did that, there's a little bit of support from the micro term right here. You can see that lower wick. Buyers or the seller trying to bring it down. They did not able to fill the gap. So that gap's still open here, as you can see. And with that, the first hour thrust gotten above the short term. And second and third hour, we did see that support on that second and third. But we did struggle a little bit because that midterm moving average coming down right there. And finally, though, on that fourth hour, we did make a move for the first time in a long time above the midterm moving average. And buyers put up that courage. On the fifth hour, we made a move. And with that, in that process, we did feel about 35% of the down gap from last Wednesday or Thursday or so. And you can see that entirety of the down gap was not filled. And this is the problem. This is what's been happening right now is that buyers are making these pops here, and what's going on is though they're not fully filling these down gaps. Keep in mind right here, there's a down gap. You see how there's a little pops here? They didn't fully fill that down gap. That down gap wasn't fully filled, and the disaster struck the market. Another one right here. You see that down gap right here? Bulls finally got back up there. Was not able to fully fill that down gap. Another disaster for a couple days or so. Now, again, we're seeing buyers making another attempt to fill this down gap from last week. Was not able to fill that down gap, the entirety of it, as you can see right here. It almost feels like bulls are fighting for it, but every time when they get to a certain level, they get too tired. And the next day, bears just bring it down very, very hard. And this is kind of the problem that we're seeing in the last month or so, right? These down gaps were not getting filled, and that's when these downturn continued pressuring the buyers here. So you can see even today the down gap was not fully filled. Here's the thing: if buyers really want to turn, if buyers do not want to be struck again by the bears and had to go through another big drawdowns, buyers must either fill this down gap that they didn't completely fill today. The best case scenario, that's why this is a risky endeavor if buyers leave the gap open, unless if they're gonna gap it over it and turn it into an island bottom. If they can't do that, it's better they fill it and then maybe a little bit of pullback and then gap back up. But once the gap doesn't get filled, as you can see, they have because that resistance gets much stronger when it's not fully filled. Bears not have to gap back up, as you can see here. Bears not have to gap back up here, right? So the best case scenario for the buyers to the most smoothest transition to the upside is gapping up. Probably the best if they can gap it above 375. But I don't even ask that much just because buyers been, really struggling here. So I think maybe gapping up above, let's see here. 370, 80 or so. If they can gap above 370, 80, 370, 60, that will be a good start. And then what they need to do is get up and fill this gap. If that doesn't happen, you might expect another, downturn that bear is going to try to come down here and fill that up gap that was opened up this morning. Let's check out that oscillator. So that bullish divergence is going to potentially help. We've seen these bullish divergences fail before. You can see right here, there's a bullish divergence right here. Really didn't amount to much. There was another bullish divergence here. We had a one-day move, came right back in. Now we got a bigger, wider bullish divergence that actually is stronger, is more potent. Again, without the follow through from the price action, these bullish divergence cannot fully fulfill what it was designed to do. So what the buyers need to do is they need to gap it over or thrust above and fill both of these down gaps right here, and then get this oscillator all the way to the top. If not, you will witness another bloody red week this week. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening of trading tomorrow.